Welcome. Thanks for taking the time to come and hear our story. I certainly appreciate it, and the rest of the executive who you'll meet shortly appreciate it also. So I'll just take you through what we're going to talk about today, and then we'll get straight into it. So we're going to talk about our business, Seeing Machines, the position that we hold in the marketplace today and what's going on in that marketplace, importantly. We're going to cover the financial highlights, which we reported for the first half of FY23 yesterday. So we'll go through the key points from those highlights and some of the key metrics that we pay close attention to. And from there we'll get into the technology. We'll talk about each of the business units that we operate, which is Automotive, Passenger Vehicles. Come right in. Automotive, Passenger Vehicles, Fleet or Aftermarket, and Aviation. At the end we'll have a panel discussion, and I'll kick off a couple of questions and then provide you the opportunity to ask questions from the floor. Ask whatever question you want to the team that are here, and we'll be happy to answer those. And at the end we'll be hosting some time just in the room next door to have a drink and a further catch up if you have time. We're going to break about halfway, just for a comfort break, cup of coffee or water, and just for 5 minutes or so. It's a pretty tight room, so I think just to ease it up a bit. So my name's Paul McGlone. I'm the CEO of Seeing Machines. I've been with the business about 4 years now, and I'm personally very pleased with the current status of our business. It's been a long time in the making. Seeing Machines is 22 years old. We've been listed on AIM for 16 years. There's no secret that we listed at a time on AIM where there was no early stage development capital available in Australia, and we listed way too early, as many companies did. Most of them are not around, and I'm happy to say that we are. And importantly, our early founders, of which Tim Edwards here is one, we're very, very focused in our business and developed a vision for really trying to understand what's going on with the human, what's going on with the operator, what's going on with the driver, the pilot in the interior of a vehicle or plane or other environment. And it's really quite important part of our culture that the guys really stuck to it, and they stuck to it for a long time through thick and thin. And here we are today, and you'll hear more about this. Here we are today at an inflection point where the technology that we've developed has been adopted by regulators, firstly in Europe, the European Commission and Euro NCAP. If you want to drive a car in Europe from 2024 with a 5-star safety rating, you must have a camera-based driver monitoring system. In Europe, there's a new regulation called GSR, General Safety, and the same applies, but it's stronger. It applies to all road vehicles in Europe. We're seeing harmonisation of these regulations occurring in some areas faster than others, and we'll cover that specifically today. So, we're in a position where we're growing, I think, strong double digits as per our half-year results, more than a 50% growth rate. We expect that growth rate to continue, and we'll also expect to see considerable improvements in margin as we go forward, and the teams will explain exactly how that's going to happen in the business. But just to introduce the team, we have Martin here as our CFO. Martin joined us not long ago, around about November, so he'll be taking us through the numbers. Mike Linnae, there's Mike. Mike will take us through the technology in a little more detail. Nick, who runs Automotive, Max, Fleet, and Pat Nolan in Aviation. And then towards the end we'll host a panel and we'll invite Mike and Tim Edwards and JT, who runs our regulatory efforts here in the US, to join us up here and enable you the opportunity to ask any questions that you might have. But just for those that are relatively new to the story, and I know some are and some know us quite well, we have really two focus areas or three segments that we operate in. Today we're completely focused on transport. You saw our purpose video on the way in, and we take that purpose very seriously. We are a safety business at our core, and we sell software and systems that enable a safer road environment. And this is a very, very important part of who we are and how we operate. So I'll start with the aftermarket business, which is where we actually really got going several years ago. This is a part of our business where we have a hardware product that we install into a truck, and that product observes the driver, and it will alert the driver through a series of escalations if there is a fatigue or distraction event, or in fact a micro sleep. So it's a real-time product that addresses two fundamental risks: fatigue and distraction, and they are the primary drivers of insurance claims costs worldwide. What's unique about this product, and we'll go into this in a little more detail, is that we offer a 24/7 closed loop environment where it's not just a beeping box in the vehicle, but we intervene directly with the operators of the vehicles when these serious events occur. So it's the application of the technology combined with the 24/7 service that enables us to reduce fatigue and distraction risks, which are typically fatal, by around 90%. And this is, once a customer has signed up to this service and experienced that level of risk reduction, it tends to be very sticky. On the other side, automotive, we develop driver monitoring systems for passenger vehicles, new passenger vehicles. We're involved today, or our technology, you'll see our technology in over 700,000 vehicles. As per the results that we put out yesterday, we're seeing strong quarter-on-quarter growth, and we expect that to continue as we're at the very, very beginning of the regulatory-driven take-up of this technology worldwide. And finally, aviation, very similar business model to automotive. We tend to sell into a tier one manufacturer through to an OEM, and so from that perspective, the business is very similar. Where it differs, of course, is that the aviation business is a level of complexity, order of magnitude more complex, different regulatory requirements. The model life of an aircraft is about 30 years versus 6+ years for a vehicle. So what's important here is that once you're in for a very, very long time. So that's the focus that we have today. Transport, three verticals: aftermarket, automotive, and aviation. So from an investment perspective, there's a very large addressable market here, and that addressable market, there's some seats up the front here, that addressable market is expanding, and regulations are causing that expansion to occur. This inflection point that I mentioned is very, very important, and given the requirements for Euro NCAP and European Commission, what we're seeing is a rapid and consistent take-up rate of DMS technologies in vehicles, not just in Europe. So the regulations are specific to Europe. There are also regulations that are very, very similar in China. In the US, we have a almost equivalent penetration of driver monitoring systems in US manufactured vehicles, but for a completely different reason, and Nick will expand on that a little later on. It's more about level 2+ driving than a regulatory force, although that regulatory force is coming. So After several years of investment in R&D, then several years of development with automotive manufacturers, we're now at the point, just in this last 12 months, have hit the point where the vehicles, the software that we've been developing with the tier ones and the OEMs are finally hitting start of production. So this is the time when we're seeing a rapid increase in software royalties from cars hitting production. So, and Martin will talk in a little minute about what that means for the financial performance of our business. It's a profound change. We're seeing considerable double-digit growth that we'll enjoy for several years to come. And as a consequence of this move to software royalties being the primary volume, a very significant increase in margin at the same time. And that's a very important part of the investment thesis that hopefully you'll appreciate by the end of this afternoon. We've been at this for a long time, as I mentioned. First mover advantage, we got our tech into the cruise way back in 2018. Things were different then. We had an exclusive arrangement with a tier one called Takata. They're not around anymore, and as a consequence of that, we were able to break free, and now we're free to operate with any tier one in the marketplace. Our Guardian business, which is all about fleet, today we have about 46,000 trucks connected to our service, and that generates monthly recurring revenue. And that revenue is contracted, and as I mentioned earlier, very sticky. Now that's a really small number. That's a really small number within a very large and rapidly growing marketplace. So the opportunity here, we feel, is very, very significant, and hopefully we'll demonstrate that also this afternoon. From a balance sheet point of view, I'm going to talk here in the context of our competitor set. We're in a very strong position today, and it was augmented by a transaction that we concluded with Magna International just last year. And Magna, of course, are one of the world's largest tier one suppliers into the automotive industry. And the deal that we did with Magna was to offer our software, our system, for use inside the rear view mirror on an exclusive basis. And for that, we received an upfront exclusive payment, but also some funding by way of an advantageous convertible note over the next 4 odd years. So balance sheet wise, we have the money to do what we need to do. I think that positions us quite firmly at the top of the pile in terms of our peer group. We have no contemplation of raising further equity, and we have a very, very clear pathway to profitability, and Martin will talk a little more about what the key drivers of that pathway are. And then finally, we're also focused on leveraging our IP wherever we can. The exclusive deal with Magna, which is very tightly defined and really could only be done with Magna, to be frank, and I can answer more questions about that later. But that's an example where we're willing to license for a specific application that doesn't harm our business in any other way. We did it several years ago with Caterpillar also, and that was really the transaction that kicked off the momentum in our business, 6 or 7 years ago. So Caterpillar today have an exclusive right to our technology for the application in mining. And we've also leveraged our IP more recently into the semiconductor space, and we now allow these semiconductor players to embed our technology in advance of our sales effort. So they're the key areas that I think are important from an investment perspective. Just onto the addressable market, and I'm presenting these numbers differently for a reason. So I'll take automotive first. So driven by regulations, this number up here is a point in time number, the 531 million. So what we're saying here is that by 2028, there is a market forecast fitment rate for driver monitoring systems that isn't yet 100%. It's about 60+%. So at that point in time, the addressable market for driver monitoring systems and occupant monitoring systems in a vehicle is just over $500 million. Now, if we look at where we're at today, we would argue we have a strong leadership position in the industry, but we're not the only player. There are 3 or 4, but there are 2 primary players, and we have close to half the market each. Now, between us, we've won about $700 million US dollars worth of lifetime business, DMS software business. And if you consider an average model life to be, say, 7 years, that's about 100 million per annum of revenue, just using averages. So the point of me making that comparison is that in order to get to 2028, and of course in Europe, 2024 and 25, driven by the regulations, there has to be a 5 times increase in new business in this specific area. And we expect that number to double again over the next 3 or 4 years, certainly as the regulatory requirements in the US follow the path of Europe. So that's at a point in time. So literally any metric you want to look at provides very strong support that of the business that we've won today, there will be a doubling and a redoubling of demand from OEMs over the next couple of years. And this gives us revenue visibility for each program out 6 or 7 years. So it's an environment that's very strong and delivers very robust and long-term high-margin revenue, which is software. In the fleet business, I've mentioned already 46,000 trucks we support today, which is a very, very small number. Now, there's lots of ways to cut this opportunity up, and how many trucks are on the road, how many new trucks are manufactured. So what is the total potential of that market? It's very, very large. So I tend not to talk about it all that much, and particularly when we look at the size of the market relative to our current position. We're infinitesimally small compared to the market opportunity. Now, what we do is we provide a safety system that we would call a video safety telematics. So the telematics industry is very, very large, video telematics being a subset of that, and safety video telematics being an even smaller subset, but growing very, very rapidly, driven by the same regulations as we're seeing in passenger vehicles. So this is a worldwide opportunity. Fatigue and distraction risks, as I've said before, are the number 1 and 2 primary drivers of insurance claims costs in every market of every modern economy. And then finally in aviation, we're really looking here about sort of 3 key areas. One is a retrofit opportunity, putting our technology to monitor pilots in aircrafts that are already deployed, in new aircraft, and also in pilot training simulators. And Pat will give you some more detail on that in a few moments. So significant opportunity in each of the areas in which we operate, driven by essentially the same regulations and the same issues around human safety. The regulatory environment worldwide is moving. Often it feels like at a snail's pace, but relative to the impact that it's having, it's actually moving very quickly. So Euro NCAP and the European Commission have laid out very clear criteria, and it's important, I think, for me to say that we presented the first science to the European Commission and NCAP. It was actually Seeing Machines that presented the idea that there was a technology that could improve the road safety outcome. And it was Tim and Mike, who you'll have an opportunity to speak to, who were the folks that actually drove that conversation. So here we are today with a set of rules that apply to all of Europe and are being harmonised worldwide one way or another. They're impacting passenger vehicles, trucks, and in fact all transport modes. And that whole effort was kicked off by Seeing Machines. And it's now an unstoppable safety movement. The next part of the story here is that we were involved and have been involved since in defining the protocols that determine performance to get the 5-star rating. So again, the same team members were involved in the definition and design of the measurement criteria that determines how the stars are allocated with Euro NCAP. So we've been a very close advisor for some time. Now, we'll talk about the future of regulations at the end, but I just wanted to give you a sense that these regulations are, in fact, not just in place today, but maturing rapidly and requiring car companies to continue to develop their driver and occupant monitoring systems over time. So it's not just get a camera in the car and get going. There are ever-increasing performance requirements and ever-increasing features that these regulations are driving, and that's really important for us. So how do we go about getting things done? It's a complex environment that we operate in. As I've mentioned, we sell software, but we sell software and design the system in its entirety. And part of our special sauce, if you will, or part of our know-how and intellectual property is not just in the development of the algorithms that are core to the software, but it's the development of the optical path, the design of the system from the get-go through our human factors approach to the problem, this whole environment around processing the signals and the software in the vehicle on silicon. Where does that reside? What is the price performance that we can get out of the processing? This is why we have several relationships with silicon vendors, as you can see on the chart here. The design of the optical path is very important to us. Of course, the software is only as good as your ability to observe, and so integral to our system's performance is the design of all of those factors that go into this very complex solution. And we partner. We elected several years ago to expand our ecosystem of partners. And this was a very important step for us. It enables us to focus on what's really important, and our partners enable us to expand in a way that we couldn't do under our own steam. And one of the real differentiators between us and others in this direct space, I believe, is the way we partner, the people that we partner with, and the specific endeavour that we work together on with our partner set. A great example of that, when we talk about delivery and engineering, we have a significant engineering force, and we took the decision over the last 2 years to continue to build that engineering force. But we've done it in a way that's slightly different, again, to our primary competitors. And we've outsourced, again, to trusted partners, not just in what we would call our engineering factory, which is the heart of what we do with customers, but right through our innovation stack as well. So I'll just mention one relationship here with a company called DEC. It is in fact an Australian company. It's about 1,000 odd people. We have about 70 or 80 engineers from DEC augmenting our Australian team. of which the majority are in Vietnam. So this is really important, and what it means today, now that we've got this relationship up and running, and they're performing, that team performs just as we do, we can flex up very, very quickly at a significantly lower labour cost. But importantly, depending on what happens in the market over the medium term, we can flex down as well. And we have now the flexibility to flex up and down in a way that doesn't destroy our business. So that was a very important consideration, as we knew we had to increase our engineering resources to deliver the features and requirements that our customers are asking for us, but we didn't want to build the fixed cost base that ordinarily would come with that challenge. So similarly, we partner on the data side of our business. Data acquisition is very important. We derive a considerable amount of data from our aftermarket business, but we also derive data from third-party programs, universities, etc. A collection is one thing, then we label, then we verify. So there's a whole range of activities that go on around data, and we partner in that environment as well. And from a human factors or pure science perspective, we partner with several universities and regulators and industry players around the world. So that's how we go about getting things done. We've dramatically widened our ecosystem, and we think that sets us apart. So just to close my opening here, we have a strong balance sheet. We have the firepower to get to profitability. We are in a unique position when compared to our competitors, and we think that's going to become more and more important as Tier 1s and OEMs dramatically increase the tenders that they're putting out to meet the Euro NCAP and other technical requirements for driver and occupant monitoring. Being able to demonstrate that you can be here, I think, is today more important than ever before. We're experiencing very solid double-digit growth in each of the three areas of our business, and you'll see more about that in a moment. The revenue profile of our business is changing, not just in automotive, where we're seeing more license revenue as a percentage of total revenue, driving up margin, but also in our aftermarket business, as we pursue more direct customers, that has a profound impact also on the services margins that we enjoy there. Over the long term, our business is we have a business model that is tied to features, so a feature-based pricing model or menu, if you will, and we tend to lock in a set of features. Those features are purchased by an OEM through a Tier 1. We offer a price for a bundle of features, and then of course the OEMs have what appears to be an insatiable demand for new features, and as we develop these new features and invest in the R&D to deliver them production ready, we increase our price accordingly. So we have a price for a core bundle of features. Naturally, that price reduces over time as we increase volume, normal market conditions, and then we increase our price, our ASP, over time by introducing new features and new systems capabilities that can effectively deliver what the OEM wants. So structurally, the regulations are very helpful to us here. It doesn't often go your way, but in this case it's going all our way. The regulatory tailwinds are here, they're permanent, they're increasing, and it's an unstoppable program worldwide that is very beneficial to us. So I'm going to leave it there, and I'll hand over to Martin, and he'll take us through the highlights of the numbers.
Thanks, Paul. Good afternoon, everybody. My name's Martin Ive. I'm the CFO, As Paul mentioned, I've been here just over 4 months. Prior to seeing machines, I've been in the technology space for about 20 years, based here in the US and in Australia. What I want to talk about today is the most recent financial performance of the company, as well as getting into some of the revenue streams that we have in the business and how they're changing over time, and what that means from a profitability perspective and how it changes the profitability profile of the organisation. So Seeing Machines has a June year end. So the numbers that we're looking at here are for the 6-month period, which is our half year to the end of December 22. And this is the first year in which we're reporting in US dollars as opposed to Australian dollars. So if you look at any historical information, just make sure that you're looking at the right currency. So we showed good progress during the 6 months. Record revenue up to $24.4 million US dollars, which is over 50% growth from the half year previously, driven by a strong performance in the Automotive business unit. Somewhat weaker performance in Aftermarket, largely as a result of some supply chain issues that we've had over the last 12 months. But even so, we grew annual recurring revenue from the connected units by 16% up to $11.9 million. And most importantly, I think we gained funding from Magna through the convertible note that Paul talked of earlier, for $47.5 million, of which we've drawn down 30 to date. Just talk a little bit about the balance sheet strength and what the contribution of that funding really means. So as at the end of December, we had $52.2 million in cash. We've got $17.5 million available still from the convertible note, which gives us total funding of just under $70 million. Free cash flow in the first half was an outflow of $18.5 million. And using that as a run rate, that would give us just under 2 years of funding. Now, expect that we'll see a similar level of cash outflow in the second half of a financial year, before we see that start to improve through financial year 24. And then we'll get to the point where we get to cash flow break-even run rate towards the end of calendar year 24 or the start of calendar year 25. So we're fully funded for our current business plan. Just looking at some of the highlights of the overall financial performance, and you can see the impact of the regulatory tailwinds on the revenue growth profile, which has improved from 17% CAGR over the last 5 years up to 54% for the most recent period. But more importantly, I think, is also looking at what that means from a gross profit perspective and the improved margins that we get from these new or differed revenue streams. And on the right-hand side, you can see the first half gross profit nearly at the level that we achieved for the full financial year last year. And we'll talk a little bit more about what's led to that change and the skew in revenue mix. So Aftermarket, as Paul mentioned, is the sale of hardware units generally into trucks and also into the mining vertical. And that generally has 2 major revenue streams. The first being the sale of the hardware unit. And this was particularly impacted by supply chain issues, as I referred to, which impacted availability, but also unit cost. And so has impacted revenue, led to the decline of revenue in this business unit for the first half, and has had an impact on gross profit as well. We now have supply of Gen 2 units for the rest of this financial year and into the start of next financial year. But I think more importantly is the introduction of our Generation 3 unit, which will be available in the first half of the next financial year, which Max will talk to more a little bit later. And the importance there is about the decrease in the unit cost. It's about a third of the cost to produce one of those units compared to the current Generation 2 units. The second revenue stream is the monitoring services revenue, which flows on from the hardware sale. And as Paul mentioned, very sticky, a monthly service fee. The churn rate there is less than 2%, and significantly, it's a much higher revenue stream than what we get from the hardware. So with that low churn rate and the additional units that we're selling, this is a recurring revenue stream that's got a very strong growth profile with over a 50% CAGR over the last 5 years, and we expect it to continue to grow strongly. Automotive revenue has two main revenue streams, the first being NRE, or non-recurring engineering, and this is where we customize our technology to meet the specifications of the OEMs. NRE is always done at obviously the start of the program, low or no margin from that revenue. As programs move into production, we start then to get royalties, which is a per unit royalty for each car produced with our technology. Essentially, that is all margin to us and flows straight down to the bottom line. So we have 6 programs currently at the start of production. So you see a small amount of royalty revenue starting to flow through. We expect that to grow significantly over the next few years as those 6 programs ramp up. We also have 4 additional programs that are going into production over the next 2 years, 2 of which are the larger programs that we've won, and they'll go online and start production at the start of calendar year 24, and we'll see a significant ramp up in royalty revenues from that point. Aviation revenue, Pat will talk to aviation a little bit later. It's a new business unit. We don't generate much revenue from it at the moment, but it's very similar in terms of the economic model to the automotive business. Start phase of the programs will be NRE with low margin, moving to production phase where we'll receive royalties at full or very high margin. Big difference compared to the automotive business, lower volumes, but much higher average selling prices. Just want to talk a little bit about the key performance indicators that we use to track the progress of the business. And I think that people can use to gauge what progress we're making from a revenue perspective. These KPIs we disclose on a quarterly basis, generally 6 to 8 weeks after the end of a quarter, once we've received production numbers from the OEMs. So on the left-hand side, we have the cars on road KPI and the quarterly production numbers. So the cars on road is the accumulation of the number of cars that have been fitted with our technology that have been produced. And then quarterly production is, how much has been produced each quarter, and that essentially drives our royalty revenue stream. On the right-hand side are the Guardian connections, including the backlog of connections that we have. So they're sales of units that we've made that are not yet connected to a truck. And the connections number is largely what we would be using or what would drive the monitoring service revenue. And you can use the backlog along with the growth in connections to determine how many hardware units we've sold in a particular period. So these can be used to gauge progress prior to when we provide revenue and financial details at results time. We'll talk a little bit about operating costs. So our operating costs have grown roughly between 15 to 20% per year over the last 3 or 4 years. This has largely been driven by an increase in R&D investment because of the requirements of the automotive programs and also the development of the Gen 3 product for aftermarket. As Paul has mentioned, the way that we've added added that additional capacity in the R&D teams is by outsourcing, including to a low-cost jurisdiction, which gives us a much better ROI on the spend that we have. But then also gives us the flexibility, depending on what requirements that we have, to invest more or invest less, depending on what the case may be. And what I want to do finally is just kind of wrap all those things up in terms of how this impacts the profitability profile of the organisation. So what this chart shows in the stacked bars is the gross profit contribution from each of the revenue streams that we have. We've then got a black dotted line that shows the operating costs, and then the grey dotted line which shows the profitability profile. And this is kind of how we see our business moving along the roadmap to profitability. So on the left-hand side, which is where we've come from, you have little or no contribution from NRE revenue. You've got some small contribution from monitoring and hardware, and this was pre-production royalties, so there's no royalty stream flowing through into gross profit. As we move further right into the middle of the chart, this is approximately where we are now. So we see a growth in hardware and monitoring gross profit as those revenues increase, and we start to see the impact of the initial royalties that we're receiving in the automotive business flowing all the way through to gross profit and then ultimately to net profit. And as we move further to the right, with the regulatory tailwinds and the fitment rates growing for the DMS technology into the automotive production, you see the significant ramp up in the gross profit that we derive from the royalties, overall leading to the profitability increasing significantly over time as those royalties ramp up. So just to wrap up and summarize, very strong balance sheet with sufficient funding to see us through our current business plans. You see the impact of the regulatory tailwinds leading to market opportunity and revenue growth. And then we see the change in the mix of the revenue streams from low or no margin revenue to high or all margin revenue streams, leading us to profitability. Thanks, and over to Mike.
Thanks, Martin. Good afternoon, everyone, ladies and gentlemen. Pleasure to be here. I've been Seeing Machines 8 years in a number of roles and have the absolute delight to be leading our R&D and innovation at the moment. And really, I just want to give you an insight into, I guess, our systems approach to technology development, which really does underpin and maintain our technology leadership position and our position as a trusted partner with our global OEM customers across surface transport and aviation. So, we develop a vision-based sensor. We develop our own AI-driven algorithms, we embed them, and it goes into a vehicle or an aircraft to assess the cognitive state of a driver or a pilot. And we do this to assess whether or not that operator or driver is safe to drive. And this is a very difficult thing to do reliably. And the demand for this sort of safety solution has never been stronger. And that's largely driven by the regulatory and NCAP activity that's already been mentioned quite a bit today. So Seeing Machines has been pursuing this safety vision for over 20 years now. And we had a watershed moment in 2018 with the launch of the General Motors Super Cruise function, which is the world's first truly hands-free driving feature. Now, what's shown in this image is a whole vehicle system that needs to be designed in a way to support and collaborate with the driver. And this is fundamental. So in this, from a Seeing Machines perspective, when we look at this image here, we can see there's a camera system, not a camera, but a camera system, factory fitted. It's embedded into the vehicle engine system. It operates in real-world conditions. It operates with real people doing what people do. And this is incredibly complex. And what I just said in the last 10 seconds actually breaks most of the market. And this is effectively the essence of the systems approach that we take to our technology development. So I'm just going to give a very quick overview, and obviously I've got to be quick, but we've got time afterwards. My technical discipline is human factors. I was a professor at a university in Melbourne in the area before I joined Seeing Machines, so I'm a little bit biased. But it really is the foundation of our approach to technology development. Very simply, human factors is about understanding people. And what can be more impactful than that? So really, if you're going to develop technology to understand the cognitive state of a person, to understand people, you have to start with an understanding of people at the heart of your design. And that's exactly what we do. So we invest in a lot of internal programs and external programs with universities around the world, including MIT and the University of Iowa in this part of the world. And it's really about trying to understand how people behave in the real world. Not guess how they behave, but collect masses of data on how they actually behave. So naturalistic studies, lab studies, but also other elements of other internal programs that we run. So this is super, super important for understanding the problem we're trying to solve. The next layer of our IP stack is the optical path. Now, there's a reason it doesn't say camera, because it's much more involved than just grabbing a camera. So really, if you think about the conditions that a driver might find themselves in, light, dark, shadow, etc. There are all these variable lighting conditions that the camera system needs to accommodate. If the ability for the sensor to capture a quality image of the driver and occupants is compromised, this is a significant issue. So in looking at looking at things like the camera position, the lens design, the filter design, the design and the spacing of the IR lights, we've got different locations, mirror, center stack, steering column. All of these are significant elements of R&D to ensure that we can get that reliable signal from the driver and occupants. The next layer is embedded processing, and Paul alluded to it in his opening remarks. We know that software is becoming more and more prevalent in vehicles with larger infotainment screens, etc. The processing demands are going up. The feature stack, or the feature requests from automotive OEMs in particular, is expanding rapidly. And this really does put downward pressure on us to reduce our compute footprint. So there's two lines of R&D that we have here. One is to develop more efficient algorithmic methods. So we're pushing the boundaries on the machine learning science to try and build more efficient models. And the second element of R&D is around how we embed that efficiently in the acceleration techniques that we use, etc. So critically important. The next layer is vision algorithms, and I'm actually going to talk about this in a bit more detail in the following slide. But a lot of people, when they think of DMS, they just think of the algorithms. So hopefully you're getting the picture that there's a lot more than just the algorithms to developing this sort of system. And really this culminates in what we at Seeing Machines refer to as safety AI, which is effectively the safety executive of the vehicle. So there's been outward-facing technologies in vehicles for many years. This is the first real meaningful push to gather data from inside the car and provide that intelligence to this safety executive to basically offers incredibly a wide range of opportunities to keep drivers safe in ways not previously possible. And of course, doing this gives us good performance, great performance, but it also de-risks for the Tier 1 and the OEM because we understand more about how the technology performs. And finally, data. We can't say enough about data. All I'll say is that we invest a lot in it, real world, laboratory, and also now in synthetic data, which is obviously a key sort of efficiency initiative for us to fast track some of our development. So this is just an overview of the vision algorithms that we sell as features. And I'm going to start on the top left, cognitive state features, drowsiness, distraction. So these are, as Paul mentioned earlier, these are the core cognitive states that are the subject of European General Safety Regulation and subsequently the European NCAP protocols. So therefore, the question that we get asked all the time from a technology viewpoint now is, how do you go against NCAP? So really, this is really driving all of what we do. So the camera is going in the car. It's the only way to meet the performance standards in the General Safety Regulation, and it's called out specifically in Euro NCAP. So given the camera's going in the car, what else can it be used for? And this is in the next category of visual state features, things like object detection, phone status, seatbelt status. This is where the explosion in the feature wars has happened. So we have 26 individual features that we have developed and are developing in this feature class. And we can see that 23 of those 26 have been sold. And they're making their way into production over the next 12 to 18 months, as Martin said, which is really important for the flow on for royalties. We shouldn't overlook the two on the right, the core tracking features and the utility features. Core tracking is essentially the ability to track the eye, the eyelid, the head, etc. So they're the fundamental raw ingredients of eye tracking. And this is how Seeing Machines began over 20 years ago. The requirement to do this well is as strong now as it ever was, because it underpins everything. And we're talking about a safety system. There's no compromise with a safety system. Similarly with utility features, these are things like, is the lens blocked? Is the sensor blocked? What's the orientation of the sensor? So you can imagine if your sensor is in the rearview mirror, and the rearview mirror is moving, it's really important that you know where it's moving and how much, so that you can interpret what the sensor's seeing. So this tells a really nice story of our development and the development of the market. What is really important, these are auto numbers, but we also see great reuse in these features with our aftermarket business, using the same cognitive state features, drowsiness, distraction, some of the same visual state features underpinned by the same core tracking, and similarly in the aviation business, as Paddle mentioned, you know, the drowsy features in commercial interests from aviation that he will talk about, and also the core tracking, the gaze tracking in commercial aircrew training applications. So we get this great reuse across this feature set. So just before I hit play on this video, I just want to highlight a couple of things. This just gives you a bit of a flavour for what it is we do. So I guess first and foremost, we've got, this is the cognitive state area here, where we've got an assessment of distraction. I'm sorry you can't read it, but distraction and drowsiness. And then we have a range of visual features, smoking, head nodding, yawning, talking, are they wearing a belt, are they wearing sunglasses? And I'll just play the video quickly here. It only goes for 60 seconds. So you can see a few things. So this is from a rearview mirror position. We're getting full tracking across driver and front occupant. There is a detection of the occupant in the back seat there. So this driver's wearing sunglasses. He has his seatbelt on. This driver here is holding a phone up the top here, phone. But it's also tracking their body pose. But as I mentioned earlier, smoking on the left, talking here on the right. So these are this is the feature wars in action, right? But don't lose sight of the fact that the blue ray here is tracking the gaze. So this still remains fundamental to this technology because it really is the foundation for all the other visual states and cognitive states that sit above that. And so just finally, there's been a lot of talk over recent years about the rate of implementation of fully autonomous vehicles. I think it's fair to say that is much further out today than we thought it might have been 5 years ago. And there's people wiser than me that say that. So what this effectively means is that all this speculation about the driver being removed is gone. The driver is more critical than ever. The driver will be responsible for controlling the vehicle the majority of the time for many years to come. So whether we're talking about the driver in this case, potentially consuming a drink, alcohol, or the ability of a front passenger to potentially help with a driver swap out or takeover, whether we're talking about active safety systems like seat belts and looking at the fact that this driver's legs are crossed and what that means for other vehicle safety systems, or whether we're looking at rear seat occupants, their age, surrounding objects, are they loose, etc. There's all sorts of possibilities in the vehicle of tomorrow that we are certainly actively pursuing in our R&D programs. But essentially, because of our commitment to the systems approach to technology development, our continual engagement with policymakers around the world, we are exceptionally well positioned to maintain our technology leadership as this environment changes. So really, in-cabin sensing is definitely going to be the safety technology of the decade.
My name is Nick DiFiore. I wanted to thank everybody again for spending the time with us and hearing our story. So I'm the guy responsible for the automotive business, and I've been in automotive a long time. I've been in OEM and Tier 1 and Tier 2 semiconductor, and I used to brag that when I had nearly 30 years in automotive, it was kind of a credential. And then as the years started piling up after that, I realized that all it was telegraphing how old I am. So, but I am an old automotive dog, and I was attracted to seeing machines about 6.5 years ago now. I joined as living through my past automotive lives, infotainment being born, telematics, and then ADAS, and making a very successful business of ADAS where I come from, and then seeing really this final greenfield frontier of ADAS, which is the interior of the vehicle, right? There's all this effort put on understanding what's happening outside the car and using that to avoid safety-related issues, but no focus really on the interior of the car. And so that attracted me really to the leader in this space. And obviously the auto industry is rapidly evolving. Automation, electrification, we're now seeing software subscription and upgrade models coming into cars. We're seeing cars really turned into connected software devices. But the underlying themes of safety and security, and also important to automotive in our business, comfort and convenience features, is really enduring and an important enduring theme for us in our business. So where are we today, and where are we headed? And I'm going to give you the perspective kind of from the lead business development and sales guy view of interacting with customers and the markets. And I'm really going to talk to you today, a theme about really 3 waves, really of what's coming for our business. The first wave is kind of depicted here and has been alluded to by the previous presenters, and this is business we've already won, essentially, and it was driven by a combination of safe semi-autonomy, right, level 2 and level 3 autonomy, and this need to have the driver in the loop for a safe outcome, as well as some really enhanced display technologies we don't talk about very often. 3D displays, heads-up displays, where it's actually very critical to know exactly where the person who's observing the display, where their eyes are positioned in 3D space. So this is where we got our start, and Mike already talked about Super Cruise, GM Super Cruise, so I won't talk much about that other than to say, we started with the Cadillac. It's gone across many vehicles now. You can read GM's marketing on that. So we're benefiting from that rapid expansion there. The upper right, you'll see the Mercedes-Benz. S-Class is shown there, but we're also on their flagship EQS and EQE. This is their flagship electric vehicles. And again, supporting level 2 driving, supporting some really really enhanced display technologies, and soon to be really supporting the regulatory environment that they're facing as well. And then on the top left there is the Ford F-150. And if this isn't an indication of mainstream deployment of our technology, one doesn't exist. That's the best-selling vehicle model in North America. Ford builds a whole lot of those, and we're pretty proud to be on that vehicle. This is actually the electronic control unit that's got our Fovio chip on it that I'll talk a little bit about when we talk about how we deploy our products. But yeah, if anybody wants to touch or feel that when we wrap up, you're welcome. So this is kind of the first wave. I'll characterize it more in numbers later, but I just want to give you a feel for it now. The second wave really are the RFQs that we're servicing now and have been winning lately and are coming in the very near future, and those are regulatory focused. I won't say a whole lot about that because we've talked NCAP, we've talked GSR. I think later we're going to talk a little bit more detail about what's going on in the North American market in terms of regulation. So let's just say it's the regulation driven, it's the next big wave. And then the wave after that is, Mike alluded to this wave of ever increasing features we call the feature wars, right? And the dynamic here is one of OEMs, and we've seen this dynamic before, right? We've seen it in active safety before. Once the technology is regulated and has to go into vehicles, the OEMs very quickly then start searching for ways to actually monetize that and profit from it, because they certainly don't profit from the required features, right? And so they start to look at ways to profit. And this is the third wave we're going to see. They have to put the cameras in the interior of the cars, and they're already now talking about cameras with wider field of views. We want to see the whole cabin. There's no end of, I've heard hundreds, literally hundreds of ideas on features that the OEMs would like to implement. And so that's going to be a big part of the next wave. And there's a lot of opportunity for us there, not just in terms of volume, but in terms of value expansion and ASP expansion with all the features. Just a little bit on our go-to-market model. And we say OEM here. I'm going to talk primarily about automotive, but OEM's really automotive and aviation. Pat will talk more about aviation in detail. But the model is largely the same. And I just want to take a minute to talk about how our products are differentiated. In the end, we do have a handful of competitors. We all license and sell and license software, right, in the end. But how we deliver that software really matters, and how we integrate that software and support the environment that the OEMs need in terms of processing is critical. We get compared to Mobileye quite a bit, and that's very flattering. There are some areas where we're similar, but our model actually differs from them quite a bit. And one of the areas is this concept of a chip solution, the Fovio chip that we sell to customers. It's, as I mentioned, it's on this board in the F-150, Ford F-150. And what we didn't want to do that was different than Mobileye is we didn't really want to enter the chip business. We didn't want to be selling chips. Turned out to be a pretty good decision with the supply chain mayhem that the whole market's experienced with semiconductors. We didn't know that was coming, so that was a bit fortuitous that we made this decision. But the main reason we didn't want to be in chips is because we didn't have to. We partnered with Xilinx, they're now AMD, who has programmable silicon that we could basically, through software, configure both the chip, hardware, and software, and get the similar kind of optimization that a Mobileye does by selling co-designed hardware and software in an optimized package, right, in a chip package. And so we did that because we had to, not because we just wanted to be in chips. And the reason we had to is when we started down this driver monitoring path, we quickly realized that the vast majority of semiconductor devices in the market in automotive were optimized around ADAS. It's a very different problem than human sensing in the cabin. And the types of processors that were developed, the GPUs, the DSPs, they were very optimized for the tasks that were well understood for exterior monitoring in the car. And so we entered into this chip solution space because we saw the need. You know, Paul talked about hitting this right performance price point and hitting that sweet spot. That's very critical to share, right, and how we're viewed in the market. And so, so we sell software. We also sell chip solutions. That's also led to us wanting to, it doesn't have to be our chip. We just want it to be an optimized chip. We want it to be, you know, optimized for interior sensing. So it's led us to actually, the IP we developed as part of our Fovio chip solution, to licensing that out now to other semiconductor suppliers to make that processing hardware available on their chips, because it allows us to really supercharge what those devices can do at very low cost and very low power dissipation, which is really important for small packages in the vehicle. And so we're licensing that out. We've announced a couple of Omnivision is a licensee, Indie Semiconductors a licensee. We hope to get more traction. What we're really doing there is we're really seeding the market with very capable devices that are really pre-optimized for our software. In terms of the channel, we participate in, it's really about the supply chain in automotive. There are the large tier 1 system integrators. They're really our customers, so we're technically positioned as a tier 2 supplier to them. So these are like the Magna Internationals of the world. And we're often referred to and thought of more as a tier 1.5 though than a tier 2, in the sense of the system capability that Mike Linné alluded to, which really gives us a lot of the capability you'd normally find at a tier 1, even though we don't want to be the manufacturer of cameras and, you know, be the guy responsible for designing cameras. We advise, so we reduce the risk that the tier 1s and the OEMs experience, right, in getting successful DMS and occupant monitoring systems to production. So that's where we are. We are courted by OEMs more and more to sell direct to the OEMs rather than through tier 1s, or to license our technology directly. We're generally very open to that. For us, it's not so much, you know, that would technically make us a tier 1. It's not so much a problem of who we're directly selling to as much as we don't really want to be the guy manufacturing the complete system, right? It's not our strength. We want to focus on our core strength, to the extent that we think some OEMs are starting to become more vertically integrated, where they want to maybe take on the system integrator role of the traditional tier 1, and they want to engage us directly. We're very, very open to that. I won't really talk about the segments other than to say, you know, in OEM, we've got automotive and aviation, you know, and really both businesses are driven from the bottom up by kind of this concept of operational efficiency and safety, although automotive, which I'm going to talk about, has a very strong element of comfort and convenience too, that maybe isn't such an important driver in aviation. In terms of the revenue streams, you kind of heard this from Martin. We've got a series of revenue streams. These are kind of ordered in kind of the way the order the revenue streams develop as the businesses mature, whether that's automotive or aviation. So R&D is where we're really seeding the market with tools, evaluation systems, demonstration systems, so our customers really understand the technology. We've been doing this for years in automotive. It's a little bit newer in aviation. So we do derive some revenue from that. The non-recurring engineering, which Martin talked about, which is all the bespoke work we get paid up front for integrating our technology and some level of customization. The royalties is where the profit really is. These are very high margins, close to 100% gross margin. And in the case of automotive, again, like Mobileye, we've adopted a kind of an a la carte feature pricing model, because what we see is OEMs have very different ideas. They all need the basic regulatory features, but in terms of the other features they add, they want the flexibility to have the features they want, not have the features they don't need at the right price point. And so we've developed this kind of a la carte model. It's also kind of interesting that we're starting to see early signs that we actually have an opportunity as well of back-selling features into cars that are already on the road, which is pretty exciting, through over-the-air software updates. Most OEMs now, the car's becoming a mobile software platform on wheels, have means to push regular software upgrades. And so this model gives us a chance to actually go back and leverage vehicles that we've already been paid for once with additional features, additional ASP tied to new features. And then there's licensing exclusivity. Licensing fees are just essentially money we get up front with some contracts when the project goes into production. And then exclusivity is something we use judiciously to really, in those cases where we think it's not just about revenue, but it's really about gaining a strategic market advantage or time to market, which was really the case we had with Magna. And I'll touch on that in the next slide. So the thing that has really been shocking for me, and I thought, it's like a dog years thing, right? In automotive, things don't happen very quickly. I experienced ADAS, the rise of ADAS, and that happened pretty quickly in automotive terms. DMS is happening so much faster. It's happening about 2x the speed, right, that ADAS did. And it's creating a tremendous challenge for the OEMs that if we can help solve those challenges or give the OEM the flexibility they need to get this technology deployed across their whole fleets quickly, gives us a big advantage. And this is something we've been focused on for a while. And so part of that is just recognizing that sometimes even different cars within the same OEMs have packaging constraints. They can't always put the cameras or put the electronics in the same place in every vehicle. So some vehicles have cameras in the A-pillar, over here. Some are in the instrument cluster. Some are in the steering kind of column area. Sometimes you see cameras in the center stack. And then you also see processing. You see these modules, whether it's a standalone electronic module dedicated to the DMS system, or we've got these supercomputers now coming in. We call them domain compute, where you have a big infotainment computer or a big ADAS central computer integrating our software there. We have to have that flexibility, right? We have to support all the most popular silicon platforms, and we need to be able to have a very optimized solution for those. So we have invested in that. The big breakthrough, probably the biggest breakthrough, is in the mirror. And this is having a fully integrated DMS solution in the mirror. We've done that with Magna, as you know, and overcome some pretty difficult challenges, which puts us in a very good position. To my knowledge, we're the only one showing a fully integrated mirror with Magna with high efficacy, demonstrated high efficacy for regulation. And why is this important to the OEMs? It's important to the OEMs because they can swap out the existing mirror with the new mirror without tearing into their instrument panel designs and packaging cameras and putting in new electronics. And so that is, for some OEMs, especially ones that have up to 100 car models they have to deal with, maybe the only solution to get there in time for the regulation. So it's quite an important development for us. And then I'll end on this slide. This slide's just attempting to put the story I've been talking about here a little bit into numbers. And so the three line charts, you see the top one is, you can kind of look at it as our TAM, so that's vehicles built. And this is complements of semi-cast. I've taken the, sorry about that. I've taken the liberty of extrapolating a little bit because I wanted to kind of go out to 2032 to kind of show the pattern we're going to see here. But generally what we have is we have a really rough patch with COVID, and we think automotive sales, though, barring another pandemic, right, will work their way up again eventually to north of 100 million vehicles a year. So that's the total opportunity. The next two lines down, the lighter blue and the darker blue-green line, are, those are two views. I respect both views. That the top line is the semi-cast view of forecasted shipments. So that's kind of a penetration view. And the line below that is from ABI. And you can see when you extrapolate them out a little bit, which I've taken that liberty, you can see they kind of converge there towards the end. So, and where it's very difficult to predict, obviously, is in that middle part where you got a huge inflection and huge growth, right? 6-month difference, in the inflection point, has a big impact. The bottom line here, and the reason I'm showing this, is if you look at our wins and the RFQs we got ahead of us, and we're looking at it bottom up because we're experiencing the real business development from the OEMs bottom up versus kind of a top-down look. We think it definitely supports something in between those two lines, right, in terms of the way the market is going to develop. And you can see below graphically here, and then here, and then here, kind of the three waves I've talked about. So the first wave, the gray bars, is business we've already won and we're delivering. And it looks very small in this chart, but it's about 40 million units that we've won. It just looks small because of the waves of opportunities that are coming. The blue bars are what we call our visible pipeline. So these are either RFQs that are already in front of us that we're responding to at some stage, or very near-term RFQs where in talking to the OEMs and the tier ones, we already know when they're coming, we know what they're going to look like, so we include them in our visible pipeline. And so that's the light blue wave that kind of peaks out at around 2028. The size of that wave is about 120 million units. So significantly larger. And then the third wave is the one we see starting in 2027. I don't think it'll peak until into the next decade. And it's quite large by our forecast, which is pretty much in line with with the third-party analysts that we're showing here. And that's more on the order of 300 million units, right? That next wave. So gives you an idea of the scope and the size of the numbers. And that last wave is particularly exciting because it's not just huge volumes, but we have a really opportunity for ASP expansion with the number of features that are going in. And that wave won't be DMS anymore. That wave will be full interior monitoring. With all these feature ideas, that some of which we're already have in R&D and we've already sold. So we're not just a DMS company anymore. We already, in that gray bar is the already won business. We already have OMS content. We already have business we've won with mirrors, for example, that are wide field of view cameras monitoring the whole cabin. So it's a very important point. So I think I'll wrap it up there, and I'll turn it over to Max to give you an idea. Oops, sorry, Max.
That's okay.
Give you an idea about fleet.
Thank you. G'day everyone, my name's Max Verburn. I head up the business unit for Aftermarket. It's my pleasure to be here today. I've been with the business about 2 years and I jumped at the opportunity to join Seeing Machines. And today I'm going to share with you our next generation and give you a better understanding what our business does. So So if you look at our two products, Paul spoke before about our Guardian product. Traditionally, this is the product we've sold. It is sold into a vehicle after production, so it's in the field. It's a hardware fitted, and we offer our unique solution, which is in-cabin monitoring and our 24/7 hour monitoring service. And this is very important. We're the only company that does that. And it's been widely accepted by many of our early adopter customers for duty of care. The other product that we specialise in is our backup driver monitoring solution, and that's our solution that we offer the automated vehicle market. Some of you may have been in the West Coast and you may have seen some of our tech if you've had the luxury of driving in an AV. This is something really important to our business. Mike alluded before about the human factor of automated vehicles, and we think it's a long curve. So the level 1, level 2 monitoring of drivers, or as they like to call it, pilots and co-pilots, is very important. We're seeing this tech also being introduced into the trucking fraternity, which is, ideas of truck platooning or private highways. So we think this is an exciting opportunity still. If you look down at the advanced driving assistance systems and our telematics solutions, our next generation product, which I'll talk about in a moment, is leaning into this space. So we've recently signed partnerships with Mobileye, Aftermarket and Geotab. And that means we'll now have access to, a bit of a leapfrog into that arena. And for me, being an ex-telematics person, this is very exciting. It gives us more opportunities for revenue, and I'll talk about that in a moment. If you look at our channels to market, so I think we've always enjoyed a better ARPU and better margin from our direct sales teams. We tend to focus directly with the larger customers. So we've got sales teams in Australia, APAC, Europe, which are very much focusing on the after manufacture, which I'll talk about in a moment, and now in the USA. And traditionally, they're the larger customers, multinationals. We've got a very good partnership with distributors. So historically, they've been one of our mainstreams. We generally work with the distributors because they're normally intimate with a database. They might be a telematics provider. They might be regionally based, for example, South America or South Africa. And it just gives us a little bit more opportunity to get intimate with that customer. Traditionally, they'll work on the smaller deals. Our technology partners are very important. So I mentioned Mobileye and Geotab today, but I'd also like to mention CAT, or Caterpillar. Paul mentioned that before. They're a long-term partner of ours in the mining sector. So we enjoy a really good relationship there that contributes significantly to our revenue. So if you look at the segments, safety has always been a very important player for us. And I mentioned before duty of care. We have on our mission statement, we exist to get everyone home safely, and I can assure you our business unit really lives that passion. So our customers are very intimate with us for this reason. Their duty of care, and it's just not just for their drivers, they're seeing the benefits of protecting their assets and also their brand. When you see a truck go past you and someone's on their phone or someone's nodding off, and the first thing you'll do is notice the brand on the truck. So this is a very big proposition that we're getting a lot of buy-in from our customers, and I'll talk about that in a moment. The other one's after manufacture, and it's different to aftermarket. And the after manufacture is a new business segment being driven by the European GSR requirements. And I'll talk about that in a moment, but it's an area of growth for our business, and we're quite excited by that too. So how do we make our money in our business unit? It's a little bit different. So hardware sales, obviously there's a CapEx purchase for the equipment and installation. We have software as a service, our annual recurring revenue. Once again, being telco and telematics, that's my hot button. It's very exciting that customers pay that fee monthly, and it just keeps growing. And I'll talk about our retention in a moment. Non-recurring engineering. So we work with our partners like CAT. We help them with their designs, and we do project work with them, and that's a good revenue stream as well. And finally, our licensing fees and our royalties. We enjoy very lucrative fees through those efforts. So I just want to focus a little bit about as our business continues to grow and where we're actually going to continue to get our margin. I mentioned our customers being intimate with us. This is very important because we enjoy a 36-month minimum contract when we sign up a customer, sometimes up to 60. Right now, we're actually talking to customers who are leasing trucks for 72 or 84 months, and they're coming to us saying, hey, can we just fit this out for the next 84 months? So this is exciting for our business. One thing we notice at the end of term, at 36 months, a renewal, it just automatically happens. So it's a pick and stick, as Paul alluded to before. We're very sticky. The customer doesn't leave us. They see the benefits of what we do. All we need is an intervention to save a life, and you'll have an operations director just so thankful. And it's so easy to re-sign a customer. Our churn rate is less than 2%. So I don't know anyone else, but that's very leading, that 2% retention, churn. Our customers stick with us. So I guess in a nutshell, our business is really, we're a growing business. We have long-term contracts with our partners. We have a very low churn, and we're enjoying a growth in our ARPU. So it's a long chain of revenue here. So with the new tech, and I'll talk about that now, the Gen 3. I just want to talk to you very quickly about the ability of the Gen 3 and where it's going. We will partner, as I said before, with the likes of Geotab or Mobileye to get into the telematics space, and this tech's going to take us there. Okay, so why the Gen 3? And what's so excited about it? If you look at the actual box, we've always had a unit. So we've had, for example, a sensor and a box. Now we've got the sensor in the box. And this is terribly important because it shows the real estate of a dashboard of a vehicle. It's very important. So we've dramatically improved that, sorry. The second part, Paul talks about the automotive grade technology. And this is very exciting. This box and this solution is capable of getting all the feature sets that Mike spoke about before. So in the future, we can scale up. We can offer more to our customers as it becomes available. It's cheaper to manufacture. And this is very exciting for us. So our BOM cost is significantly less. Greater revenue, more margin, and it makes it more affordable into the marketplace so we can compete against other areas. This is also easy to install. This is a big thing. It's a reduction of more than 50% to get this box installed into a truck. And if you understand trucking, for example, or even a coach, you can't have your vehicles off the road. No one's got the luxury of having 4 or 5 hours off the road per vehicle. So this is very exciting. We've reduced that to 2/3 or less. So we can get more connections done more quickly, and we can work with our customers. And I've mentioned before, and I keep saying this, it's integrated into the ecosystem of telematics. So this gives us the other opportunity now to offer services or be part of a service so a customer can come to us and perhaps want their total solution. We're not moving away from our core competency. We're just having the ability to address that market as well. So there's significant revenue, as Paul showed you before, in that area. Okay, so I just want to talk about the after-manufacture. This is a very exciting development. The luxury we've had with designing the new Gen 3 product, it addresses the European GSR concerns of compliance. So we're not getting old tech and trying to bring it forward. We've designed this tech in line with our OEM partners in Europe. So Europe's a massive opportunity for us. We've been working with some of these OEMs for the last 12 months. So we're ready to go with them in 24 onwards, and that's what we've been working on with this new product as well. So we see this as, being very exciting. There's 23 million trucks globally sold. Nick showed you before the OEM business model, so that won't work in the trucking fraternity. They might have one model that's only 1,000 produced per year and another one that's 10,000. So that's why this solution's going to be perfect. It means that it will be fitted as production's completed and it's compliant for the customer. So it's ticking all the boxes for them as well. So it's a tremendous growth opportunity for our business. And look, finally, I'm conscious of time, but if you look at the geographic expansion, the US is very, very important to us. And with the new Gen 3 product, we're going to be very competitive here. So we've put in place solid partnerships with Geotab, Mobileye and others. We've put in place direct sales teams where we really believe the tailwinds of the regulatory environment from Europe are going to hit the US in the next few years. So we see a lot of upside here as well. So, and we have a very healthy pipeline. So, look, we really feel we have a very bright future here, you know, with this product going forward. Okay, thank you. Thank you. Oh, sorry, I'll introduce you now. Sorry, Pat. Pat Nolan, who's going to talk about aviation. Thanks.
I might start, I heard Nick say that he was an old automotive dog. Not quite sure how I'm going to place myself as I stand in front of this group. Maybe a bit of an aviation geek, but definitely with a mindset around trying to create a commercial model within our organisation. I've been at Sea Machines now for nearly 7 years, and I think we've the aviation side of the business has certainly been able to get a lot of the benefit from everything that you've heard today from an automotive perspective, from a human factors perspective, and from fleet. And what we're really trying to do now, if you think that the sales cycles are long in automotive, then I guess my world is a pretty interesting one in terms of what those sales cycles look like. And there's two gentlemen on the front row here that also know all about that. So. But I guess I just want to jump into it from the start and look, it's clear that we're not the only player in aviation in this space, but we've got a very strong leadership position, and that's certainly come from 6 or 7 years of talking with OEMs, with carriers and with operators. We can say things like that we have the world's best signals. And our feature set, and they're not our words. So we're certainly seen as the absolute leader in this. And also Mike mentioned real world experience. I think one thing that the aviation part of the business has done certainly over the last few years is we've just finished 3 OEM flight test engagements in aircraft, in a wide body aircraft, in a narrow body aircraft, and also into business jets. Which has gone very, very well. We're also fully integrated and operational in flight training environments in both the military context and also in commercial. But what we're starting to see now after this period of time is the emergence of the RFQs that are now starting to come, both the aftermarket perspective for pilot support and also not only aftermarket, but also some production opportunities with OEMs who are starting to go, we now need to actually have this capability in our aircraft. So I'll just jump through now and really just start to maybe look at the question of why are we relevant and why now, as far as aviation actually goes. So it's an amazing industry, the aviation industry, but it too has problems and challenges. And right now, probably none more impactful than the global pilot shortage. Circa 600,000 pilot shortage over the next 20 years. Now that's not new news, that's news that's certainly been around for quite a while. But I guess the question is, what's the impact of that sort of pilot shortage? And there's definitely a training impact, training and simulation, which is an area that we're quite strong in. There's also significant fatigue related impacts. If you can imagine, if you haven't got enough pilots, you're going to be working those pilots harder. There's going to be an increasing level of fatigue related issues that are very current and very real right now. And a pilot shortage of this magnitude also means that what's happening in the left-hand seat and the right-hand seat of aircraft means that the experience levels of these crew are actually starting to be somewhat diminished. And the last one, which is a little controversial, but it's quite real right now, is this pilot shortage, as I said, that isn't new, is also potentially going to change the cockpit configuration in commercial aircraft. I'd like to make one note before I go on, is that Seeing Machines as an organisation doesn't necessarily advocate for reduced crew or for single pilot operations, but if you've listened to everything that this group has said today around understanding the human, we've got a very unique capability to be able to support and understand exactly what is happening in the cockpit if that configuration does change. So I'll just look to the slide now in terms of some of the use cases. We've done a lot of research and development, for a very long time, and I keep hearing it at conferences and those sorts of things. Everyone always talks about the problem. What they really want to start to see now is what solutions can actually support aviation. As we move up, the flight crew training and simulation space, the capability there is, and we are quite mature. Like I've mentioned, we do a lot of work with CAE. We're fully installed in with Qantas and with Emirates, and also into military simulators. But that is precise gaze tracking to understand exactly where the pilot is looking in real time, to support and understand how they make decisions. It's an amazing use case that is really growing quite strongly, and as you can imagine, if you need more pilots, you need more efficiency in training, and that certainly is a key focus area for us. The next few steps as we go up here in terms of fatigue risk management systems with real-time alerts. Again, we can leverage the heritage and the history of this company by being able to support that sort of capability in a cockpit in real time. One example, which is an interesting one, I guess, in the US, controlled rest and real-time alerts. It's not actually legal in the US, but it is in almost every other country. And just really quickly, the scenario is if you've got two pilots, controlled rest is a mechanism where one of those pilots actually has a rest and sleeps. So obviously it's not during critical phases of flight, it's during the cruise. So one pilot lobs back and has a sleep. One of the biggest issues though in relation to this particular capability is quite often that pilot wakes up, looks across, and the other pilot's having a nap also. So what I want to sort of reinforce here is this capability. If we are tracking both the pilots, you could desensitise the pilot that's having crew rest, and you could continue to monitor what is happening with the pilot flying and support that mechanism, again, to make sure that the most safe opportunity is being managed. And in the end, I guess I've spoken quite a bit about training and simulation and what happens in the aircraft. Real success for Seeing Machines on the aviation side is what's tracked, monitored and understood in a simulator can then actually be tracked, monitored and understood in the aircraft, and then you really do have a very strong training and safety-based system, which is exactly what aviation wants. Seeing Machines isn't going to be, weren't put on the planet to build aviation equipment. It's difficult, it takes a lot of certification, but our signals and our capability is what we're really driving. And the two organisations down the bottom there are certainly very key in what we're doing in terms of aircraft related activities now, and we will look to license our IP in this space. It's the right solution, it's the right decision for us, and it would be fair to say that we're deep in conversations with all of the right parties in that space. Last slide, I just wanted to identify potentially an option to look at in terms of just grabbing an ecosystem from aviation, and this is just an example at an airport, to just think about what Seeing Machines could actually do in relation to what happens at an airport. Bottom left-hand side, when the pilot, the crew, or the passengers arrive, they're going to arrive in a car or a taxi, and it's going to have that capability absolutely in it. As you go across to the middle top, when you're going through security, which we all love, especially in this country, there's no doubt going to be people sitting there that are going to have this capability in terms of whether they're being distracted and where their fatigue levels are at. Max will look after the fire trucks and the ramp vehicles in terms of trucks to understand where their fatigue levels are at. We do quite a bit of work in the air traffic control space as well to understand what's the attention, alertness, workload levels in air traffic control. And then on the top left, these things that cost $300 million. Let's make sure that what we're doing is having this capability in there, which is the highest risk factor, that if we can have this capability, as always, to focus on the human in the loop, in that case being the pilot and the crew, to actually continue to work through what Seeing Machines is really all about. That's about it from me.
Thanks, Pat. So, look, I understand that we're pushing up against time, but we have some Q&A. For those that are able to stay, I think you might find it pretty interesting. But just to summarise, we are at this inflection point driven by regulations. It's a very positive and often quite unusual position to be in. We are all about transport today and increasing the safety outcome within transport. We have large addressable market across the three areas we've spoken about. We're growing at double digits. We see, and is demonstrated in our most recent set of numbers, this margin expansion through a change in the revenue mix. These things are all happening now. This technology will be in every vehicle. Regulations are driving it into commercial vehicles. And as we've just heard in aviation, the acute risks that we're reading about here in the US every day these days in terms of near misses, but also back in our home country, Australia, our flagship carriers looking to put on 2,300 pilots in the next 18 months. Now that can't be done in the old way. So this technology has a very important role to play there as well. So I understand if you have to go, but if not, I'm going to call Mike, JT and Tim to the stand here, and I'm going to just pose a couple of questions, which I think you'll all find interesting, and just to get it going. And then please, if you have any questions of your own, feel free to ask.
Hello.
It works? Good. Okay. So look, I'm going to start with you, Mike. You know, NCAP, you were involved in developing the relationship and the KPIs and the outcome that we see today that is positively affecting all of us. How does that affect the rest of the world? What happens next?
The short answer is everyone follows. Euro NCAP has a long history of taking the lead. They put out a roadmap in 2017 that said by 2023 and 25 they would have DMS protocols in practice. A lot of people have put a lot of effort in across the working group to demonstrate to groups like Euro NCAP that this technology is real, can be trusted and relied upon, and really Euro NCAP's just made it happen. And drowsiness, distraction, the two stalwarts of road safety. There's no other way to tell if someone's drowsy or distracted other than looking at them, and that's what this technology does.
Thanks. So JT, the US, different place, different rules, different regulators. What happens here?
So I think, to start with NCAP and to talk about where that is, so the U.S. has taken a really different approach. I think in the United States, our NCAP has not been updated since 2007. And in the U.S., DMS is looked at differently, where you have level 2 has really been the driver of adoption of driver monitoring. So where we're going to go, as part of the infrastructure law, which many of you have heard, the President and the Secretary of Transportation are sort of crisscrossing the country and touting that legislation. There's a requirement by Congress to NHTSA to update the NCAP program. And so with that, Seeing Machines has been working with NHTSA and working to make sure that our comments are included as part of that update to NCAP. We look at, with the ADAS system, and Nick talked quite a bit about ADAS, we believe that DMS is a critical component to ADAS. And so we're working as they develop those new NCAP updates to make sure that DMS will be a critical component of that.
Okay, very, very interesting, and we'll cover a bit more about what's going on in US regulations in a minute. Of all the meetings I have, this is one of the areas where there are typically a lot of questions. But from a technical point of view, Tim, what's going on to support this kind of change?
Yeah, it's an interesting question. I mean, in the R&D space, the race is really on for the next thing in the regulatory environment, which is The whole legislative push around drink driving, and also, if you look at that closely, it also refers to general impairment. So the big safety hazard on the road is still functional alcoholics driving vehicles, but also if you're going to get to Vision Zero, you're going to get to zero transport fatalities, you've got to cover all of the cases of impairment, which, you know, we've got distraction, we've got drowsiness, we've got drink driving, and then we've got about 15 other things. We've got people with low blood sugar, we've got people with low blood pressure, we've got people with viral illnesses, we've got people with stomach complaints, heart conditions, it just goes on and on. And so what is really interesting about that problem is for those conditions, it's not a matter of having pre-trained data. You can't get data on those conditions. There's no way to do it. And so how do you make a system that can tell and detect these other forms of impairment? And that's at Seeing Machines, we call it the general impairment problem. And it's really a matter for next generation AI to solve. And when I say next generation, I'm talking about methods of AI which are not classifiers and they're not regressors. They're typically anomaly detectors driven by like highly quantized transformer models. And this approach is really exciting, and this is what we're doing. The other approach to alcohol that you may have heard of is around blood alcohol content, and there are sensor designs out there which are competing with this approach. And the problem with those approaches, these are breath systems or touch-based systems, is that they're exotic bits of hardware, and at the end of the day, they've got a residual minimum cost that can't be eliminated. And the general impairment solution that we're developing, and I think it will ultimately, lead in this race, will be something that's already using a camera, that's already in the vehicle, the processing's already there. It's just software, right? So that's where this is going, and that's a regulated event which is coming soon.
Thanks, Tim. So JT, just specifically with regards to driver monitoring in the US and its, I guess, more sort of forceful uptake from regulators. What's going on there?
Sure. So I mentioned the bipartisan infrastructure law, and that's a piece of legislation that we really engaged with Capitol Hill on, and worked with them to make sure that as they were putting together requirements for NHTSA to regulate different vehicle safety technologies, out of that really came three opportunities for driver monitoring systems. So the first one is a requirement to update the US NCAP program. Mike mentioned the roadmap that Euro NCAP is using. Not only is there a requirement in the infrastructure law for an update to NCAP, there's also a requirement that there be a roadmap every year that goes along with NCAP. So that's the first thing. The second thing is that there's a requirement for distracted driving technologies, and that there become a rulemaking, and NHTSA do a rulemaking. They have 3 years to look at DMS systems, and then if they figure out that the systems save lives, which they do, we know that, then they're required to initiate a rule. So we're working very closely with NHTSA as part of that. We're meeting with them frequently, and are working on a technology share so that they can better understand how driver monitoring works. So that's part of my role in Washington. And then finally, there's a requirement starting really now for a rulemaking on impaired driving to really focus on alcohol. And the way that law was written, and we worked with Congress to help write that law, is in such a way that it would allow driver monitoring systems to be a solution. And then finally, in terms of regulations, just to add one other quick point that's really important, because NCAP is so woefully behind in the US, you've seen other organizations step in and make recommendations for consumers. So the Insurance Institute for Highway Safety consumer reports, we are working to engage with them and are actually working with them. And if you'll notice, As part of their most recent recommendations on level 2 driving systems and driver assist systems, or L2 plus, every day there's a new word for it. But with those recommendations is a requirement in order to get their 5-star or their equivalent to a 5-star safety rating, you have to have a camera-based DMS system. No longer just a hands on the wheel driver monitoring. There has to be a camera in the car to make sure that the driver is engaged. So that really is the regulatory scheme right now in the US.
Thanks, JT. So look, here we are, a small Australian micro-cap company influencing regulations around the world, starting first with Europe, and now voice has been heard and translated into regulations in the US. I find that pretty amazing, to be honest.